and welcome to another major market movements end of the week market review for June 5th, 2015. I'm Quad G, and in this video we're covering the PM complex, starting off with gold. Looks like this trend line is definitely seeing some clear breakdown through it, and the current movement down also takes out the last swing low. So previously we had a higher low here and a higher high, but the market wasn't able to maintain that uptrend, and now we've completely reversed it, and now we have a new lower low compared to this last swing low. So things have turned decisively bearish with this development. You can also see in the QG3 that gold has a clear QG3 bearish alignment to the downside, and you can also see that the 20 DMA is starting to curl over and move to the downside as well. So it's what was starting off to look fairly bullish here back in May has completely turned around here, and we're back into a bearish alignment. We're starting to push that lower Bollinger Band to some degree, closing below the 3 EMA as well. Lets us know that we're in an impulsive move to the downside. Gold on the weekly, lowest weekly close here all the way back since middle of March or so. So that's certainly bearish. And gold on the EWO, not much to see there. Still, as far as the daily is concerned, it's just more sideways chop. For the RSI, the 40 didn't hold, as you can see. We dipped below the 40, and now we more than likely going to see this market chase it down into the 30 level at least, maybe even back down into the 20s. And the MACD on the daily is still bearish to the downside, and weekly was previously bullish, but it's closed out and is now neutral. So overall picture for gold, definitely looking bearish at this point in time, and nothing out there suggesting a turnaround. So the expectation is that we'll continue to see some more selling going into next week, especially while we're below this last little short-term swing high right around here at about 1205, 1204. So and the 20 DMA as well should, I think, cap any advance to the upside if we're going to maintain a midterm bearish trend. Silver. All right, so silver on the daily here. Looks like it tried to close as a small bullish hammer, but it's fairly small. It's still negative. I wouldn't do anything with that. And also this impulsive drive to the upside above that low there at 1614. We've clearly trumped that. So complete reversal from that impulsive move. And you can see the previous move was only 3 waves up, and which is best to be counted as an ABC move. So working on a new drive to the downside. The silver daily QG3 is in a bearish alignment to the downside, much like gold, with the 20 DMA curling over as well. It's starting to force that lower Bollinger Band over. Silver on the weekly, solid weekly close to the downside. That's certainly looking bearish. And EWO, again, since we're in the middle of this kind of range-bound chop over the last several months, it's really not showing us much of anything. There was the chance of possibly coming up to challenge this last swing high here, but that's completely wiped out now. We're right back to the zero line, which is an indication to me that we're going to continue to be in kind of a slow, choppy consolidation mode for possibly the next few months even. Silver on the RSI, clear break of the 40 there. Probably going to come down here and test the 30 again. And silver on the MACD daily is still open to the downside, and weekly we're still open to the upside there, but the histogram bars definitely shrunk this week, indicating the closure or closing action. So silver, I would say, definitely in a bearish mode as well, especially while we're underneath the 20 DMA right up here at about 1688. More on that in a minute. All right, so platinum continuing to drift lower. The day it was trying to close as a bullish hammer candle, but again, I wouldn't do anything with that just yet. We're still getting a close underneath the 3 EMA there. QG3 is definitely in a bearish alignment to the downside. Weekly, again, I think I pointed out this last week, we're getting another weekly close that hasn't been seen. These levels hasn't been seen since way back here in 2009, middle of 2009. EWO, again, not much to show you there. We could get an incremental low underneath this last swing low, and then maybe turn around, and if that was to take place, we would have a positive divergence on the bottom side, but that potential would be wiped out if the price continues to move lower and the EWO comes down and meets or exceeds this last swing low in the EWO. So we'll see how that pans out over the next several days. Let's see, we broke the 40, come down here, probably going to test the 30 or even lower again in the RSI. But that too does have the potential of setting up a positive divergence with regard to this last swing low back here. If we get an incremental low and a bounce up, and the RSI is clearly above the 20 level that was pegged all the way back here, then that would be a good sign that maybe we're setting up a positive divergence in that market. And the weekly on the MACD is closed out some, and the daily wide open to the downside. All right, so platinum, I would say, is still in a bearish mode. No signs of turning around just yet, but we'll keep an eye on this incremental low. If we do get a sign of a turnaround, and that RSI is still well above the 20 level on the RSI, then that might be a bullish indication of a positive divergence, but really nothing much to do here except keep short. All right, let's move to the Elliott wave charts. All right, so one of the things I like to do when the short-term or mid-term counts are just not working out as expected, it's always good to go back to the longer-term charts, take a look at how things are playing out, and then come back at it from the larger scale perspective to determine where the market may be heading next. So that's kind of what I've done here. I've been looking at this count as my top bearish count, and it would suggest that we're still got a wave 5 to work out. The 5 should be a 3-wave move. We got the A and the B of that move complete, and now we may be working on C of 5 of Y of C of 2, which means this could be a final move to the downside. And it more than likely would produce another low underneath 1130, and it could happen later this year, maybe in the August to September timeframe is what I'm thinking. That's typically a really good time frame for the end of a bearish cycle and start of a bullish cycle. There's plenty of evidence in the past of August in particular being a good month for a turnaround. So at this point in time, while we're below that key point of resistance at 1204, 1205, my expectation is it will continue to move down, and but this is probably not going to be very easy trading at all. You're probably going to see a lot of whipping around. Every point that of potential support, you're probably going to see traders rush in to buy it up because they think that's the bottom, and it'll shoot up for a bit, and then the bears will beat it back down. And so if my suspicion is correct, this is going to be a tough go over the next few weeks of potentially a lot of false bottoms that just get beaten right back down, just a lot of volatility. So we'll see what the market's going to give us. I will do my best to guide you, maybe even set up a few scalp trades intraday that we might be able to get, maybe somewhere between 10 to 30 points out of. In silver, maybe somewhere between 50 cents to $1 on any potential bounces or sell downs that I think are possible. But as far as the midterm, I don't think it's going to be wise to get too involved with picking a bottom or getting overly excited on the short side, because the short side I do think is limited. Yes, we could come down here to the 1100 level, maybe even move below it, but we got to watch. But since this is this could be the final leg to the downside, a potential turnaround here could erase your short gains fairly quickly. So all that to say that this might be a rather, as far as trading is concerned, it could be a rather boring bit of time with a lot of chopping back and forth, which is not very executable friendly, if you will. So we'll see how it goes. All right, so silver here, again, taking a look back at the longer term count, I do think that the best way to count this is an ABC to the downside initially, a flat wave X, and then an AB, and it looks like a tapering move to the downside, which is encompassing a 5-wave move with a 1, 2, 3, 4, and now maybe a 5-wave move to the downside, a 5th wave into C of 2. If we zoom in a little closer here, this could, I think, is a wave 4 triangle possibly that's still being worked on here with an A, B, C, D. This looks like a potential double zigzag. So we might see another a bounce, another move down. It'll probably test that blue trend line, and then we may see a 3-wave move up. Typically on wave E, you rarely see wave E come all the way back up to the upper triangle boundary. That's fairly uncommon. Most of the time wave E comes up and does maybe a 50% retrace of the wave D move to the downside, so 50 to 61.8% Fibo retrace maybe. And once that's complete, then I expect to see another thrust to the downside. And I do think that move to the downside will probably challenge where this manic drop and recovery pegged all the way down here at the upper 13 level. You could definitely see a thrust down into August, September, possibly to challenge that level, and then give us an incremental low, and then maybe a recovery from that. What would end up being a triangle thrust recovery type move in silver. Let's look at GDX here again, backing out to the long-term Elliott wave count, and it does look to me as though we're still working on wave C here, and I've gone back and reorganized the count to what appears the most likely based upon the current movement. And I do think we've got an ABC down, an X wave, and then an A, B, a triangle B here, and then a thrust down into C for a second zigzag. And now this three-way move here, zoom in on that. This definitely looks like only a three-wave move up. This could be a double X or a second X wave. And now we're working on another zigzag to the downside, an ABC move for C of 2 for what could be a major bottom. Now I do think we have pressured that upper multi-year downward trendline resistance. We've pressured it again, and my expectation is that over the next few months, going into maybe September, we could see this market chop downward and probably just underneath that trend line to kind of pressure it for a bit. And then once this downward move is complete, more than likely giving us an incremental low underneath this low set back here in November of 2014. And that low was at 1645. We could have that come down, give us an incremental low underneath that level, and then that market might be finally ready to pop up and end wave 2 and start wave 1 of 3 to the upside, which if this is all correct, should have very little trouble reaching up here to 64 or higher in one impulse. That wouldn't surprise me at all. All right, so here's this venerable 21 to 22 month cycle. It's been pretty stalwart indicator over the last few years of picking tops and recently picking this bottom here. And the expectation was we were going to get another bottom right here in last March, which would have been March-April timeframe. Now, granted, the market is still holding above that low, and that low was at 1142. We're seeing the market stay above it still, but we're definitely not getting much in the way of fall through to the upside. Over the last few months, we've seen a couple of inverted hammer candles here. So it's not looking real good for this cycle to generate another bottom. It may skip it entirely, it's looking like, and which is an indication of itself, okay? Because when you start to see a really good cycle like this that's played out, hit every top, hit this recent bottom, or well, not very recent, but back here in 2013, but relatively speaking, recent. When you skip a cycle like that, where you don't generate a turn, typically what I've observed with those types of cycles is it's an indication that you're starting a new cycle. You're starting something completely different. So it would be a change from what we've seen previously with this impulse up and this corrective move. And so Yeah, we might have to say goodbye to the 21 to 22 month cycle, which has served us well over the last few years. But with saying goodbye to that, we need to start saying hello to a new potential cycle. And new cycles typically start from new bottoms. And well, start from a bottom because the last few years here have been to the downside. So a new cycle should start off at a bottom more than likely. So we'll be watching for that and see what kind of new cycle the market will generate. Okay, so that's it for our PM market coverage for this week. I hope you all enjoyed it, and we'll be talking to you later. Adios.